So we said turnaround Tuesday. Well, I guess it was a turnaround, right? We did come back quite a bit. What should we call this? Wacky Wednesday? We got news, we got earnings, we got stocks to cover. We got a real special guest coming on at 8:35, so stay tuned. We're going to have fun on pre-market prep. Let's get started.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. We had a strong post-market yesterday. Never have seen that closing price of 70.50. We're up 27 handles at 59.97. We'll see if we can get into that 6,000 handle and stay there. The buck, that's trading up 22 cents at 106.45. A little quiet consolidation. TLT busting out over 90, but pulling back today, down 51 cents at 90.91. Crude just couldn't hold that 75.5 level USO. It's flat now at 74.20. GLD flat 268.63. Silver flat at 28.85. And Bitcoin, we're in the 8 handle here. We're down $285 at 87,660. Let me pull my charts down. Let's get Dennis and Christian on the stage. And Dennis, where are you, Dennis? Dennis, you must be so happy.
Because my hockey team sucks?
No.
Because
you can become
winner never goes away?
No. Because
why?
you can become a citizen of the United States for $5 million.
Is that what they said? It's
Yeah.
$5 million. You can just go and boom, give them $5 million and become a citizen.
Yeah, gold card.
Okay, well, that's interesting in the least. Gold card, just buy your citizenship.
Correct.
Maybe to get some money. The problem is you could get some really bad people too.
That's
really
exactly
rich.
what I thought. Okay.
Yeah.
All right. Hey, Christian, how you doing today?
Good morning, guys. Good morning. Happy Nvidia Day. Happy Nvidia earnings day.
Yep. And quick question before we get into everything. So we hit a low yesterday, right? In the S&Ps, 59.24. What does that level coincide with? And I know Christian's going to get it because he's a student of the markets.
A low from a month ago.
A low, you're very good, Dennis. A low from what particular day?
DeepSeek Day.
You got it. There you go.
We bounced on DeepSeek Day. We bounced on DeepSeek lows.
Yep. Now,
this is such an interesting market. I mean, we go from really 4 days ago, S&P's breaking out and looking like they're going to make new all-time highs, to despair, like the media, like the AI bubble has popped and Palantir, it's over and everything. The despair out there, like in social media, is just awesome to watch. I mean, I'm still in the camp. Just cooler heads prevail here. Sideways for the win. Selling reps, buying dips. And that's what I'm going to continue to do. I bought a dip. A couple of these dips are not working out, so don't kid yourself. I bought a few. Hood dip, not working out whatsoever, but it's bouncing this morning. VRT dip worked very well. So VRT, and I know we're starting off script here a little bit, but that's what we do. $88. It got down to $84 yesterday. It's 98 today. It just rallied 14 points. Did they say something? Did I miss something here? I don't know. Okay, they're going to participate in a JPM conference. Is that the news? It's up $14 in 2 days. There's some big moves here, Christian. Let's just talk the volatility overall before we start getting into the SMCI report, which it's coming, folks. But let's just talk this volatility overall here, because there is some big money being made and big money being lost. How do you approach really volatile markets when you're seeing 16, 18% moves on stocks that aren't even reporting earnings?
Well, what I find interesting is to your point regarding, it's mainly a growth correction, and things are still kind of in a range. But that fear and greed, the CNN fear and greed index, which is not my favorite to look at in terms of sentiment, but I do find it interesting once it gets to like extremes. It got to extreme fear yesterday. So, with the market down 3% from the highs, and again, it's different groups. If you look at the VTV ETF, which is the value ETF, it really hasn't done anything, and there's various names that are
Nothing.
breaking out. I looked at the S&P 4-week new highs versus new lows yesterday, and definitely new lows have been picking up, but there was also, it was like 1 and 1. There was, for as many names that were making a new low yesterday, there was as many names making a new high. So it is a major rotation. It is a major rotation into consumer names acted really well. Walmart, Costco, BJ Wholesale, they acted
Defense.
so they got a nice bounce yesterday. So there's a lot of stocks that are going up too. Look at some of the insurance names: Progressive, PGR, at new look at that. It looks like
Wow.
a AI stock. So
Well, Berkshire Hathaway. I mean, that's all tied in the same thing. The financials, certain pockets of the financials though holding up well. Other pockets not so much. So it's a weird market because you look at like Bank America, straight down here for a week and a half. JP Morgan not having a great week, but then you get Progressive going up. It's like, Christian, and we've been saying this for a while here too, the rotation has been wicked, but there's rotation even within sectors.
Even within
you're
sectors,
seeing rotation.
Yeah. Check out Ice
within.
Baby, Ice Exchange.
Right, like straight up. And I guess, increased volatility means increased trading. So maybe there's some logic behind that. But I mean, you can't just all of a sudden say, well, banks are going down, it's going to be bad for all financials. Not the case. Banks go down, they buy something else. We talk about that QQQ algo all the time. Those stocks, the ones you just all listed off, a lot of those stocks are in the NASDAQ. Those are in the Qs, like the Costco's, and the consumer staples you were talking about, like the Pepsis. The Ross Stores is in there too. I mean, it's a bad example, but AstraZeneca's in there. I mean, this is where we're at. Amgen's in there as well. So drugs and staples rally when Nvidia sells off and the AI trade comes off. And the main reason, again, is just the ETF effects. They're so strong now. So, 10 years ago, we had some ETFs, but it's not like now where there's just, I think there's actually, somebody said, I don't know if it's true or not, there's more ETFs than there is stocks. I'm not sure if that's actually true. I've never verified that, but there are so many ETFs, I would not be surprised in the least if that fact is true. So you cannot, if you're a regular trader, an overnight trader, a day trader, even a swing trader, you've got to respect the ETF effects, because Amgen rally is probably nothing to do with Amgen. It's everything to do with Nvidia and AI trade being weak, and they're just moving in to other sectors that are defensive within the index. That's where we're at. It's a weird market.
Yeah, I mean, I'm just going to bring up a couple other names, but the reason why I'm doing this is just because to show you that there's a lot of stocks that are going up too, but AbbVie is another one. ABBV is also breaking, like,
defense.
it's doing really well. So, I think the main thing to realize is this happens from time to time. There are going to be stocks, and just like what we're seeing with some of these value stocks too, there will be profit taking on them too. But, there's nothing wrong with rotation after you've seen parabolic moves in some of these growth stocks. So I don't think that that's a bad thing. I think we're also at the end of February where we're supposed to sell off a little bit. That's what seasonality tells us. So I think that, if these are the names that you really like in terms of the growth names, now you're getting a nice pullback, and you probably want that. Who wants to buy these things after they're up screaming higher, up 100, 200, 300%?
Yeah,
so
hard to chase.
I think this is very good for the market.
I think so too. I think it's a healthy pullback. We've talked about, a lot of people are saying the great tech crash. I mean, just because the stock falls 20%, it was some of these stocks like Palantir, we're up 500, 600%. I mean, so you're talking, a correction here. Well, really give a perspective. Palantir is just getting back, not even back to where it was at the beginning of this month. And we're talking about this huge fall. It's just losing the bubbleiciousness of it. And maybe that's a healthy thing to do. I think we do need some stabilization. I mean, there is opportunities, obviously, to just catch falling knives. It works sometimes. It doesn't work other times. Like I said, it worked with VRT for me, did not work with HUD. So, I got one winner, one loser right there. But I think we just need to, give perspective here that, this market, even though some stocks are off 20, 25% from the highs, A lot of this was just bubble, so it's just getting, giving back that excess, irrational exuberance. It's giving some of that back.
You know
That
what?
doesn't
You know
mean
what
that this is
hurts you
over.
on the hood? You know what hurts you on the hood?
Bitcoin,
Yep.
for
Yep.
sure. And you know what? And I screwed up on that too, because it's like a rash decision, thinking too quickly. Bitcoin hadn't fallen yet, and I've just talked about that. And then, it lags a little bit, just as much. We're bouncing on tech today. If tech stays up, I would look for Bitcoin to probably bounce back. If tech gives it all back, then there could be a different story. But it seems like Bitcoin lags a day. Like, I've just noticed that, maybe a selective perception on my part, but Bitcoin definitely doesn't lead. It lags a little bit. So when you see a huge tech sell-off, it's not a bad idea to short some Bitcoin. You see a huge tech rally, it's not a bad idea to buy some Bitcoin. That's just a selective perception maybe on my part, but I'm noticing that more often than not. But obviously, and nothing's going to matter after 4 o'clock. I don't know what time Nvidia is. We know the time, but they're going to report here tonight. Expected move, I think, is around 10%. We're going to preview it here. We'll dive right into the details here. But I just got to say, like, any tech setups here from charts perspective kind of goes out the window here when Nvidia reports. Fundamentals are going to drive the bus.
Should I
tonight.
give my special technical nugget on Nvidia now, or should I
do
save
Nvidia
it?
now, and then we're going to go into SMCI.
Okay. All right. First of all, and this is my only statement I'm making, the relative strength in Nvidia is incredible.
And it has been.
Yeah. Because I look at the DeepSeek low of 113.01, and this thing, not even close.
Yeah.
Not even close. So that, that's all I'm saying. It's shown excellent relative strength. What they're going to do on the report, what their guidance is going to be, what the hell they're going to say, I don't know. But when I look at a stock like that, I see the S&Ps go down. I know what a big component. To me, that says it's a strong stock.
I mean, Christian, what is the expected move? You were saying it. What do you
I
know?
think it's 10.4%.
Just over 10%.
Also, when you look at the past earnings history, remember last quarter, because again, I think that's the most important thing. How does price react to what they're saying? Last quarter, back in November, the stock went up 0.5%. Back in August, the stock went down 6.4%, and then the previous 2 quarters to that, the stock rallied up one time 9% and up another time 16%. But yeah, last quarter was a very muted response. Option sellers made money with a move of up only 0.5%. So this time they're implying over 10%.
Those option traders are really good. And I mean, if you're always buying, calls and puts, I'm going to say it again. In the long run, it's a recipe to probably lose money. The more money is made selling options. And maybe this is a good segue into SMCI, because the option traders, Christian, to your point, you tweeted it out before yesterday, before the 4 o'clock, before we actually got the filing. It was a 24% expected move. That was the expected move that they were pricing in for this week. There's no report. It was just whether they were going to file or not. They told us last week they were going to file. So the rating was on the wall, literally, that they were going to file and not miss this 5:30 p.m. deadline yesterday. I actually took a shot. I'm like, you know what? I'll hold my nose. I bought the close, 45.54. Stock went down like 43.5, and I'm like, before the filing, and I'm like, man, is this just going to continue to leak until they file? Because it was like 4:30, and I'm like, this could go down another $3 or $4 if they get close to this 5:30 deadline. But then I think it was around 4:36 or 4:38 they filed, and the stock got a huge pop. I sold too soon. I should have waited for the expected move. I sold at 51. Probably should have held on because it's now 55. And if I would have been reading Christian Fromhertz's tweets, if I would have held on for another hour or so, I would have got the full expected move up there at 55 or $56. So the question is, now what do you do? I mean, it was kind of a layup to be long SMCI in it. And I didn't take it with a full size position because I was too nervous, but it was kind of a layup because we knew they were going to file, because they told us they were going to file. So I'm very surprised, that, there was that much, pop even from it. But I mean, what now? That's the question.
It's sold off into the last couple days. So this pop, and again, it looks like you think, oh my God, 24%. It gets you back to where the stock was trading on Monday. So
yeah, true.
That's it. I mean,
yeah.
Back to where it was on Monday. I mean, it's a very volatile stock. It's crazy because they did wait to the last minute and the stock sold off, because the longer that you wait, the market didn't like that. But if you scooped it up, you did a great job, and congrats on your trade.
Yeah, it was a good one. I think I sold it too soon. I was like, you get an instant, 5 points, 5, 5.5 points on it. It's like, oh, boom. And it did actually go back down after I sold it. It went back down like 49. It bounced around in there for a little bit. But eventually the expected move won. And if you would have held for an hour, you would have got the whole thing. So, but you know me, I always enter pretty well. I exit very poorly a lot of times. So sometimes too early, sometimes too late. I got to learn how to exit positions better. But, I'll get
One
in the
quick thing,
answer. You guys got to
I'll
figure out
give a
the exits.
technical note on this.
Please.
Well, first of all, we got a Brent alert, and the Brent alert is Nvidia. The last 2 quarters is reported at 420.
Okay.
So
it's
keep that on
420, and
your.
it's scheduled for 420. We have that confirmed as well.
Okay. For me, technically, Christian, yeah, it's back where it is on Monday. I'm just gonna look at this 62.5, 63 area. Now I know it blasted to 66.44 on the 19th, but you got a double top there at 62.5. You had all these highs right here back in August at 62.5, 63. So I think for right now, I think that's a sell zone, 60 to 63. You're at 56, 57. I think the longer it takes to get back, get a strong 60 bid, I think you might get a little bit. I didn't dig into the whole report or what they said, but I'm a little surprised that it's not, not back up. At least it's 60. So we'll see
Well,
if some people ring the register.
Well, I just want to say congratulations to them. They're now just like every other company that's a listed company in the United States. Great,
Good
wonderful,
file.
great
They're
job.
10Ks. Yeah. So obviously, accounting more to be desired at SMCI. To take that long to file a 10K is absolutely ridiculous. Still cheap stock. If you believe all the numbers, stock is cheap. I think dips could get bought. But again, if you're making a technical call on SMCI ahead of Nvidia, it's going to be tough too, because Nvidia is going to move everything to do with AI, especially SMCI. So, I mean, huge, obviously, customer there. So keep that in mind. I want to go to a couple other stocks that are kind of related here. Obviously, the AI bubble burst, the tech bubble burst, last week. Axon, AXON Enterprises. We talked about this one yesterday. The stock last week was $715. Then we know had the huge fall, $100, loses another $100. So going into this report, this stock was down 220 points on a $700 stock. It fell 30% in 4 days. The bar was on the floor for Axon, and the company, actually before that, we knew they were firing on all cylinders. So I'm kind of ticked off. I was so focused on the SMCI, I totally forgot about the Axon. I wanted to go this one into the report too, just because I was like, they're probably going to beat, because the company was doing good before tech bubble burst. They blew it away. 208 versus a $140, 575 million versus 566 million. The guidance they raised slightly on revenue, which is way good enough when the bar, went from here to here in 4 days. So again, if you're trading earnings, it's all about the bar. When you see a stock fall off 30% 4 days to a report just because of a broad market sell-off, the bar and obviously went a lot lower, and they were able to get easily over that bar. And you're getting a big pop on AXON today.
I'll be looking for 5. Wow, it's still a ways away from 584. I mean, that's your 3-day high. So I don't know how much more they can, I mean, that's still $20 away. The 50% retracement, let's just call that up at 600. But that's what I'd be hoping for. That's still $20 away, up $66. Top of yesterday's range of 502.24. So I think people that took your philosophy, Dennis, are just like, I don't care about 584, 560, 570 is good. So I don't know.
I'd rank, yeah. You all of a sudden got 70 points in the blink of an eye. We're still in a market where obviously the fade trade, selling rips and buying dips is working. So I think when your stock pops 14% on an earnings report, you ring the register. Celsius, for instance, laggard.
Oh.
Remember we talked about this 3 days ago. You can go back and rewind the show. It was $34 when we were talking about it. And I was like, this stock is still a dog, and there are a lot of people who are down money in this. It probably doesn't hold. I said on the show, I believe I said it, I'd be a seller of that stock right now. 3 days later, it's trying to fill the entire earnings gap. It's all the way back down 27. If this isn't a Steve Miller market, take the money and run, I don't know what is. But I mean, that was a huge move. When your stock pops 25, 30% in a couple of days, or even on an earnings report, We are not in Kansas anymore. This is not 2020 where a stock that goes up 30% goes up 100%. We are in a choppy, vicious market. You take the money and run. Celsius, whoever, wasn't taking the money and running, wasn't listening to pre-market prep. That thing, I cannot believe it's given it all back in 3 days. That's
Yeah,
incredible.
fill in the gap. Could we do a quick teaching moment here? Let me. I just had it. Someone asked for what's relative strength, and I think we all can give our own definition. For me, and I'll just go back to Nvidia here. I look at where the stock was trading. I look at it; it's a big component of the S&P, and I look what it did on the DeepSeek day, and it went to 113. The S&Ps did the same thing, kiss that low, but only, Nvidia only went to like 126, 127. So it's just when you have a stock that is trading better than the market, it's holding levels parallel with the market. Triple D or
Yeah, no, that's good. You summed it up pretty well.
okay.
Obviously, just stock showing strength relative to its peers, stock showing strength relative to the indices. So
Okay.
that's what we're talking with, showing good relative
What's
strength.
nice too is you could do this now, and that's a great definition too. I agree, Joel, and you could do this in many charting programs. Like I use TradingView. You could just put any stock and you put that in a slash. So put your stock in the numerator divided by the S&P. And if you could see like what I always look for is for that stock to be outpacing and out trading the market. But it's great that you could do that in basically many trading platforms now. And you could see, and to Dennis's point too, you could look at it versus a peer too. Like you could look at you could look at Nvidia and you could look at it over SMH to see if it's trading above its peers or the market itself. And that's how I look at relative strength.
Other stocks, we had a lot of stocks in the news, lots of earnings stocks. If you want to cover any one specific, let us know here. But I'm going to go to Workday because this stock is up substantially here. It's one of your cloud stocks, and we actually have, surprisingly, everybody's going to talk about Nvidia, but we have a lot of cloud stocks reporting tonight too. Salesforce, Snowflake. I mean, the list goes on and on. There's a lot of tech companies reporting here tonight, so keep that in mind. I just want to give you those Workday earnings: $1.92 versus $1.78, $2.21 billion versus $2.18 billion. What's interesting is this one was not selling off into the report, where we had so many stocks just getting killed into the report. Look at Workday over the course of the last week, just completely ignoring the sell-off. That's relative strength. Had a lot of strength going into the report, and now obviously the stock has a good report, pops up substantially. I still think we're in that Steve Miller market. Take the money and run. I see multiple highs: 282, 285. On the charts there, I see the pre-market high up over 287 or 288. I think you probably run into sellers just because there's so many people who are spooked on this market right now. It's, it's not an obvious trade, but it's working more often than not that stocks are giving back the gains, or at least giving back some of them. So I think when your stock pops up, in the case of Workday, over 10% on earnings, I think you take the money and run too. Joel is doing that on purpose. 100% he's did that on purpose. He always does this with his Workday joke. And then I yell at him, "We can't hear you. We can't hear you. Workday. Workday."
Oh, I'm sorry. I was
though.
I had a phone call. I had to take the phone call.
Yeah.
I like this 282.5 level too. You peaked here before you broke down. You got a pop there. I mean, if I had it, I would have been out at 82.5, and I would care less that it went to 287 or whatever. But that's a lofty area. For Workday, you want to talk Mediterranean food here? Christian, do you have any comments on Workday? I know that's a stock you follow.
Workday, just the fact that I think it didn't sell off is just because it's not in that bucket of super high growth. Yes, it's a software company.
True.
But it's not super high growth. So I really like what Dennis said. I wish I would have followed this more over the last couple of weeks, is take the money and run. So I agree there.
Cava.
Mediterranean.
We've got the report here. Yeah, so I'll give you the numbers here. This obviously is a stock that is super high growth. The earnings here, I'm surprised. This is actually a head scratcher one for me, because with the market we're going in, and maybe it's a bar thing because the stock was $140, similar to Axon, where a stock is 140 and it's 90. So you're talking about a stock that fell 30% in like 8 days. So the bar was very low. They actually missed numbers. I mean, the revenue beat, but the earnings missed. 5 cents versus 6 cents. Restaurant same-store sales growth is only 6 to 8% for 2025 is what they see. That doesn't sound that huge, super hyper growth either. So, but the stock's holding up. The stock is holding up well, and I think maybe actually, it did sell off on the initial numbers, but maybe the bar, maybe the fact that this stock was absolutely a disaster in the report, has saved it here.
I mean, up 370. I'll just look for a
What was the
daily high.
pre-market low?
It dipped. It dipped to
It was down 10.
88.91.
It was down 10.
Yeah, wow.
Yeah. The bar, again, this shows you, and I often talk about dumb money. That news algo might be the king of dumb money. Sometimes it's right, but so many times they are just wrong. And it's not just one news algo. It's not one person. There's multiple people. There's a lot of like traders that aren't that good at trading, to be honest, using algorithms. But I mean, again, bar. So if I was writing a news algorithm writers, one, I would incorporate the bar into the news algorithm. Meaning, if the stock misses, what did the chart look like before going into the report? Was it straight down 30% in 4 days going into the report? Because maybe I don't want to short that stock. Maybe I don't want to sell that stock down 10 because the bar is simply a lot lower. So again, we talk about, a lot of people say, oh, retail's a dumb money. There's a lot of dumb money in algos too. Lots of dumb money out there, folks. Obviously, the person who sold this or algo that sold this at $88 has serious seller's remorse because stock's 102.
I like 103, yesterday's high. Show me you can get a bid above yesterday's high and work your way back up. So right there, a relevant number, boom, right where we're trading at right now. S&P's poking their head up above 6K here, up 31 handles. Too bad they didn't give you a shot to buy the close yesterday. Dennis, did you notice stock strong like in that initial like 2, 3, 4 minutes right after the close or not?
Yeah, they kind of just were buying them right off the bat. And I think maybe, and then again, Nvidia often runs up. I went long Nvidia on the close, already sold it. It's already popped up. But I mean, it often runs up when it's going to report the next day. So I think just excitement. I think Workday really helped the tech market too, because, it is widely followed, even though it's not one of those growthy names. It's still a widely followed tech name, and it reported right at 4 o'clock and popped substantially. And I think that really helped the market too. So there was a number of reasons, but it's just been a slow, steady bid. And again, you got to give perspective here. I mean, 540 on the Qs 3 days ago, 530, 520. We had 510, under 510. It's just oversold at that point in time. I mean, we just sold off 30 points on 500, 6% in 3 days. Probably going to have some seller exhaustion here eventually, and that's what we're seeing right now.
Oh, that went below the deep seek low just by a little bit too. And then it also was buffeted. Well, that January 27th low was 510. So, wow, what a lot of confluence there with the indexes. We got a few minutes before our guest coming on. I know y'all are going to be fired up for that at 8:35. I'll keep you in suspense.
I tweeted it out already, so the suspense probably isn't going to be that much.
Well, I told you.
It's going to be a Tesla analyst.
Yes, a Tesla analyst on Wall Street.
That maybe or maybe not has been bearish in the past.
Yeah. No more clues.
No more clues. No more clues. Let's talk the other automotive stock, General Motors here. Move away from earnings just for a second here. General Motors is looking at their stock price and just be like, what in the absolute hell is going on? Like I've talked before, it's trading like 4 times earnings. They come out $6 billion share repurchase. So that they're telling you they're mad at their stock price when they're doing stuff like that. $6 billion share repurchase, jacking up the dividend from 12 cents to 15 cents. Not a huge bump, but $6 billion buyback is substantial. If there was not a looming tariff war, I would buy GM. But there is a looming tariff war. I don't know where this is going. It's going to be very bad for Ford and GM. And I think, obviously Mexico, we're talking the Mexico-Canada stuff. If those tariffs do go in, it's not good news for General Motors and Ford. So I don't want to be long those stocks heading into a potential tariff war. Maybe there's going to be a deal, and then those stocks will get, a relief rally for sure. But I don't know if there's going to be a deal. There was a deal last time. There may not be a deal this time. People are saying, oh, there'll be a last minute deal. There won't be the tariffs. I'm not so confident in that. So it's hard to be long General Motors or Ford with the potential for tariffs coming March the 5th on Canada and Mexico, where obviously a lot of auto parts and, the average, just, fun facts, the average, car, the parts travel back and forth, sometimes as much as 7 times across the border before the car is actually finished. So I don't know why that is, but there'd be a lot of tariffs, be really bad on their business. Farley's been on CNBC already, obviously CEO of Ford, talking, that this is not going to help their business whatsoever, these tariffs, looking for hopefully exemptions or something. But, that's probably not going to happen because tariffs, Trump has said no exemptions. So keep all that in mind if you're blindly buying General Motors and Ford. I do think General Motors is super cheap. I do think there's potential for the stock to go up long term. I do think they're going to be involved in a lot of other things, including a full self-drive eventually too. We know the Cruise division. But I also think that I can't buy it ahead of a tariff war.
Agree, concur on all those things. I don't know if you're going to get another shot here at the pre-market high 49.07. Nothing really, nothing there. You had a low one day, the old, close near the low. Then you had 49.16. Next day you hit 49.23. So let's see if there's some paper stacked up there at 49. And instead of looking to sell this, I think I'd be more patient, see if I could get a pullback, maybe to 46.5, 47, and maybe look to reload. But it's a bold move. I mean, it's a bold move.
We're trying to make a statement.
Yeah. Yep.
The $6 billion buyback is a statement and saying, what the hell, market? If you don't want to buy our stock, we'll buy our stock. I don't blame management. I'm with them. I said on this show before, if I was General Motors, I'd consider taking this company private if they're going to just be a printing press like this, because the market's giving them zero, for valuation. Now, obviously, they're not going to do that, but it's just saying how extremely undervalued this stock is. Its PE, forward PE is 4, not 40, 4. Is there a case, Christian, where you would be interested in any of these names? But you like them when they start to show momentum, so you want to see it start to come up a little bit. But, I mean, this has been a value trap. It has no doubt been a value trap. The people who are buying this and saying the PE is 6 are now looking at a PE of 4 and saying, well, why can't it go to 3 if it goes to 4? Did you know a stock with a PE of 4 goes down to 3, falls 25%? That's not good news. Christian, what are your thoughts here, General Motors and Ford?
Well, there's a song that I heard that you guys liked from the 80s. It was called Forever Young. This one is called Forever Cheap. I don't just buy stocks just because they're cheap, because this stock has been cheap forever. I feel like, not forever, but a long time. I need some type of catalysts to say, this stock is going to move higher. So I'll pass on this.
Yeah, and I'm going to pass for now as well. If we get, clarity on where the tariff war is going, maybe I'm going to get down and dirty in GM, but not right now. 8:33, 2 minutes before our guest here. While we're talking the tariff war, I just want to say I'm very nervous from a Canadian perspective. I've been holding Bank of Montreal on my long-term portfolio for 20 years. My wife used to work there. We've had legacy shares. The stock has just been an absolute tear. It reported earnings yesterday and ripped higher again. I believe Bank of Montreal, BMO, not far from all-time highs, not back to where we were in 2022, but come back a long ways. I also had shares in a small Canadian bank, Laurentian Bank. I also had shares in CIBC, which is CM. I sold all those stocks yesterday. Why? After 20 years of holding BMO, because the banks, if we do get into serious tariff war, Canada is going to suffer tremendously, much more so than the US. There's no doubt about that. It's our biggest trade partner, all of our export markets. Why pick on the banks? I'm not saying I'm not short them. I just don't want exposure to them. But it's ground zero. There's 6 big banks in Canada. Obviously we have some, regionals and smaller stuff like Laurentian Bank. But this is where you borrow money from. This is where these Canadian companies go for business. I mean, if business starts to suffer, recession hits, it hits the banks. That's the bottom line. I'm nervous, man. I'm setting up my portfolio to not be impacted as little as I can if this trade war with Canada does happen.
All right, that's going to bring us to 8:35, and we got a special guest on today to talk a lot of hot topics. Gordon Johnson, GLJ Research, joining us on pre-market prep. Looking dapper as usual, Gordon. How you doing today?
Uh-oh, mute. He's on mute. In the corner, Gordon? Why? Check your computer, Mike as well. Oh, we're so excited. He looks so good today, too. Gordon's going to go to the background.
Yeah, he's looking dapper.
Can you work with him? Brent going to work with him?
Brent is
figure out Gordon's issue.
Yep. Good old Brent working today, even not feeling well. Working in the background there. You want to talk lows?
Yeah, quickly we can jump into lows, and we'll just interrupt as soon as Gordon's ready because we love Gordo. LOW, lows earnings. I will give them to you. Lows earnings, $1.93 versus $1.84, 18.5 billion versus 18.29 billion, 12.20 versus to 12.40 EPS guidance. Holy mackerel, they make money. I mean, like these companies, 20 times earnings, I guess, because $250 stock. But Home Depot obviously reported initial disappointment, then popped. Lowe's is just popping. LOW, and we know the stock has somewhat been depressed coming in, but not really that much. But a lot of construction, we had the hurricanes, the wildfires, lots of things to think about that people may actually need to go to Home Depot and Lowe's and rebuild some stuff. So interesting. LOW.
Okay, did get a nice pop here. We are trading up 836. We're off the pre-market high. Pre-market high comes in at 253. Man, this seems like the same trick today. The moving average right there at 53.63. No daily high in that area. So we'll go with the Christian Fromhertz 50-day moving average here. Boom. I'm going to try and bring Gordon on one more time. Hopefully we can hear him.
No,
we can't.
Okay, so StreamYard's working. It could be a setting on your computer, Gordon. It could be, just your mic volume. I'd also unplug your mic. Sometimes we have a lot of experience with this. This happens, every once in a while. So sometimes I unplug my headset, plug it back in, or unplug your mic.
There's also a settings button too, where you can make sure you're using the right mic or speaker too.
Yeah, it's in the middle of the StreamYard. It says settings, and then you can go to audio.
Yeah,
and then
he's not muted in StreamYard though. StreamYard I can see is not muted in, so it's a mute on his computer somehow, or his microphone's just not working, but it's probably something else.
Well, while we're figuring this out, I was just going to mention too that the home builders yesterday, believe it or not, just to the point of rotation, and all you need is something positive when a group is so beaten up. But if you look at the XHB or ITB yesterday, that group really it was the outperformer yesterday. So, again, the rotation under the hood, lows, and I think TGX reported too this morning too. They're also up nicely. They're up to 126 this morning. So
yeah,
that's a nice move by TGX as well. So,
and the earnings were surprising because they were decent, but actually the guidance was a little bit light. So I'm actually surprised by this because this is the stock that's been moving up here. The earnings were a flat out beat, nice beat, $1.23 versus $1.16, 16.4 billion versus 16.2 billion. But looking ahead to 2026, they're seeing 443 to 440, 434 to 443 versus 459. They're light on the guidance. That's not something, unless I'm reading this guidance wrong. It's very interesting, that the stock is rallying on light guidance. I don't totally get this. So this is one of those moves. Sometimes you get a move that doesn't kind of a head scratcher, but I would think the stock would be down on light guidance. So maybe they said something else in the conference call. We're not listening to the TGX call, but this guidance was not great.
Maybe it's just this. Yeah, you're absolutely right. The guidance was not great. This comparable sales number was good, and maybe that's what folks are looking at. Comparable sales plus 5% versus estimate 3%.
I got a little sell zone here, and it's right where it's at right now. There's a high just under. We got two highs just under 127. That's where you're trading 127.30. And then another high 127.5. So I mean, can't buy it up here, If you're looking to take some profits, this is a target. The other thing I just want to mention about this stock is this. Look at this monthly. I mean, there's someone big here. I mean, they've been here for the last 4 months. The all-time high is 128. So if you're looking for a breakout, to all-time highs, it's been a major seller, 127 to 128, going all the way back to November. So that's a look at TJX. Do you want to talk spirits?
Do we want to try Gordon one more time here, because we're having trouble testing this behind stage here, so we just need
this is new.
You guys hear me now?
Oh yeah,
there we go.
Bingo, boom, we got him. Awesome. Gordon Johnson is here.
All right, Gordon, I want you to clear up the U.S. macro situation for me.
Yeah. So
in one sentence,
the U.S. macro situation is choppy. Listen. It's our strong view that the market right now is one trade. It's AI. And clearly we have Nvidia after the market today. But I just want to highlight a few things. So it's looking like the U.S. I'm just going to read from my notes here. It's looking like the U.S. economy has peaked as policy uncertainty is hurting confidence and freezing investment. I think all of us agree on that. You have government job cuts that clearly have a strong multiplier effect due to consultants, DC private spending freezes, et cetera. You have Microsoft last week via a number of sell-side notes being the first to call a top in AI CapEx. Meanwhile, inflation has bottomed. We're above target. We've been above the Fed's 2% arbitrary target for nearly 4 years. We're up 4 months in a row. And inflation expectations are rising as Mag 7 earnings growth is looking peaky and the rest of the world is outperforming the U.S. So in a nutshell, it does not look good. But I think that near term, the market is one trade, it's AI, and we got to see what happens tonight with Nvidia, and I think that's going to determine where the markets go near term. But if you take a step back and look at the macro environment, credit card defaults, construction spending, wage growth, all of those things are pointing to us either being in a recession currently or being very close to a recession. And I think Trump's tariffs push us over the cliff into recession.
Okay.
All right. Let's talk those tariffs a little bit farther here, because obviously, we had a temporary deal with Canada and Mexico 23 days ago. The 30-day deadline is coming, I believe, on March the 5th. One, what are your thoughts? Do you think we're going to get another last-minute deal here? And if we do not get a deal, what does that mean? Like, what do these tariffs mean for, obviously, the U.S.?
Yeah, so that's a great question. And with the Trump administration, the answer is who knows? That's the problem. There's so much uncertainty that you're having a lack of investment and thus a lack of essentially growth initiative. So what happens if we get the tariffs? I think it's catastrophic. I think it sends ripples throughout the economy. I think it supercharges inflation. We recently upgraded one of the stocks we cover, Cleveland Cliffs, on the idea that you are going to get tariffs, which we've seen in the steel sector, which is pushing prices higher for steel. It's a trade, not a fundamental call, but nonetheless, we think the trade works. If you look at the last time Trump was in office, steel prices went above $1,000 a ton. The steel stocks did phenomenally well. We think we're set up similarly now. So I think it's inflationary. I think it's bad for the consumer, bad for the economy if we get the tariffs. But nonetheless, that's what Trump has been talking about. He's the tariff man. He loves tariffs. I think he is going to do incrementally more tariffs, whether it's on Canada or Mexico or it's reciprocal. And I think it's going to be very bad for growth and very good for inflation, which is negative for the overall economy.
His rationale is it's short-term pain for long-term gain. Is that valid? Is it, to hurt us in the short term in order to reap the benefits in the long term? I mean, taking a longer term perspective.
Is it valid? I mean, yet to be seen. But given how ridiculously overvalued the entire market is and specific stocks are, some trading at 50 times revenue, just so your listeners know what that means. If a stock is trading at 50 times revenue, what that means is the market is saying the revenue they expect for that stock in 2025. So let's say, stock X is trading at 50 times their $10 million revenue. The market is saying that company is going to pay them as a dividend 100% of their revenue this year for the next 50 years, right? That means the company has to see exponential growth, because you can't pay out all your revenue if you have, cost of goods sold. You got to pay your employees, you got to pay taxes, et cetera, et cetera. So companies trading at these multiples is ridiculous. So any slowdown in growth is going to cause a catastrophic re-rating in the stocks. And so if he's saying short-term pain, I don't think he fully knows what that may mean with respect to, the impact of stocks it's going to have, thus the impact of jobs and the overall economy. So I think short-term pain could be much, much more painful than many of these pundits realize.
All right, let's talk about a beaten down sector, the solar sector. First Solar getting a little pop today, 574 off its earnings report. Buy the dip in solar or not?
Well, it depends on what stock you're talking about. So we cover a number of solar stocks. The only one we have a hold rating on is First Solar. First Solar is the cleanest shirt in a dirty laundry basket. Just this morning, BP announced that they're reducing their renewable energy investments from their plan to over $5 billion a year to now $1.5 to $2 billion a year. Clearly, Trump is the man right now. And all of these corporations are falling in line and bending the knee to, quote unquote, King Trump. And he's not keen on renewable energy investments. He's a drill baby drill guy. You juxtapose that against a backdrop of structural oversupply in the solar industry, the likes of which we've never seen. And then you add to that pot of solar jumbo, what we think are going to be congressional hearings on tax fraud, potential tax fraud being committed in the residential solar space. I think the solar sector this year is going to be one of the best plays, but on the short side. I think solar stocks, even though they massively underperformed last year and the year before, I think they underperform again. I think there's a number of companies that need to go out of business due to the oversupply, and I don't think that's priced in. So I think if you're long the market, you can be short the solar stocks as a hedge, and I think that works out quite well.
Not looking for a rebound in solar.
No.
Okay.
No.
Everybody wants to know why you're thinking about Tesla here. I've been, I was bearish Tesla for a long time. I went bullish for a bit and obviously long for a long time. Reason I sold most of my Tesla stock is because I'm worried about not so much the valuation, but actually just what Musk is saying. He is really upsetting, a lot of people, especially outside the US. I mean, Canada is absolutely hating on Musk here. I'm Canadian. But, internationally, we're seeing, sales numbers drop. I think, this, honeymoon that we had with obviously him and the Trump administration, with Trump and the big pop that Tesla had after Trump got elected, it's kind of over here now. And I think there's a lot of people who are just, not Trump supporters, maybe voicing their opinions by not buying cars because the European sales numbers coming out aren't good. What are your thoughts here, just, on what Musk is talking and, and is it impacting sales?
Yeah, so let me give you some facts, right? Because a lot of my peers on Wall Street, we believe a lot of the people that cover Tesla are analytically bankrupt. So the issue with Tesla, we think this is going to be the year that Tesla cracks. We're talking about a 50 to 60% slide in Tesla shares. And let me explain. So effectively, in January in Europe, Tesla sales fell roughly 48% quarter over quarter and nearly 50% year over year. That's in January. In Canada in January, their sales are down 70% year over year. In China, the week 8 sales came out yesterday. They were down 9% versus last year. Now they're down 12%, despite them extending a number of incentives, et cetera. In the US, their sales are imploding, right? But we haven't got the numbers yet. I'm basing that off of the inventory data we have. So the street is estimating Tesla's going to do 422,000 cars in Q1. We right now have a range of 360 to 370. The reason why we don't have a solid number is because Tesla gets very aggressive with discounts, so we need to see what they're going to do through the quarters. Kalshi, the betting markets, is at 360. Troy Teslike at 370. So it looks like the street number is going to be grossly overstated. Why is that an issue? Here's the problem. 88% of Tesla's revenues car sales and service and other, came from selling cars in Q4. That business is imploding. And a big reason for that, as you said, is the alleged Nazi salute, the full MAGA, and a lot of his buyers being liberal Democrats, whether it be in the US or globally, and them completely turning away. But here's the kicker. Tesla has said they're going to unveil unsupervised driverless cars in Austin, Texas, June of this year. We think that event is going to be an utter disaster. Let me explain. So what Tesla has been promising next year, every year since 2015, nearly a decade, they said we're going to have unsupervised driverless tech in your car next year. That's not what they're going to unveil in Austin. What they're going to unveil is a mapped, geo-fenced, teleoperated fleet of cars, not something that's in your car, but their own cars that they're going to be allowing to operate around Austin. The problem is their technology doesn't work. What's the data we have? You go to TeslaFSDTracker.com. Their cars are having interventions roughly every 150 miles, critical interventions roughly every 300 miles. Waymo has a critical intervention every roughly 2.4 million miles. What that means is that on average, Tesla's cars are going to be getting into accidents between each charge. My point is this. If they release this technology in June, as they said they are, and keep in mind, I thought that maybe they could be teleoperated, so they could fake it. They can't do that. The latency, essentially somebody can't drive a car from an office. So I believe that there's going to be significant issues when they release this technology. I think it's going to be a huge failure. Number one. Number two, everybody's talking about their robots. The best robot experts are saying Honda's robot technology from 20 years ago is more advanced than Optimus. We do not believe they're going to sell any robots in a major way this year. I think that's also going to be a major disappointment. And against that entire backdrop, their business of selling cars is going to be imploding the entire time. We get daily sales out of 5 countries in Europe. We get monthly sales out of Europe, China, and we get quarterly sales out of the US. So every week, literally, you're going to be having bad news for Tesla. The insiders are selling. I think this is the year, finally, the bluff is called. And one other thing, very important, right? Tesla has pulled we're going to build a plant in India pump this and last week. They also pulled we have FSD in China pump. Didn't work. The stock was down. So these pumps that they usually do, where they talk about things in the future, are no longer working. Investors want to see results, and the results are dismal. So whether you want to attribute it to Musk, competition, we think it's a combination of all, and inferior cars, Tesla's numbers are going to be horrific this year, and I think it's going to get reflected in a stock that's down 50 to 60% on its way to our target of $24, which I think is generous.
So yeah, the issue is that Tesla seems to have not traded in the last year off their sales data because, we had disappointing sales really last month, and when they reported earnings, their earnings were not great. What makes, the shareholders wake up and say, hey, this is still a car company here. So what makes those sales numbers actually matter? Because it's the story that's driven it.
I could not disagree with that sentiment more. Let me explain. So before Tesla's Q3 numbers, and we put out a tweet on this, we think those numbers were highly questionable. Without the general ledger, we can't prove anything. But we think there was a lot of accounting chicanery. Tesla's stock had went from 400 to the 100s. Tesla had that's from 2022 to 2024. Tesla had massively underperformed the S&P 500 and the Mag 7. If you had shorted Tesla stock from 2022 to pre-Q3 numbers 2024, you had made a killing. That's a fact. So this idea that, what happened was they did the accounting in the 3Q. And by the way, that reversed out in Q4, which is why the Q4 numbers were so horrible. But most importantly, Elon Musk made a binomial bet on Trump winning, right? If Kamala would have won, where would Tesla stock be right now? I would argue it would be in the double digits. In fact, Elon Musk said if Kamala wins, he's going to jail. That was him. So he made this bet on Trump. Here's the problem. Trump is the worst thing that could happen for EVs, right? Not only is he talking about pulling the 7.5 thousand credit, but he's also talking about reducing emission standards, which means those credits that Tesla sells, the 100% margin credits that Tesla sells, basically socialism for one company that the Democrats gave to Tesla as a gift, is going to go away to a large extent. So I think that Trump is going to be very detrimental to Tesla's actual fundamentals. And I think that people are starting to realize that. So I wouldn't say that you couldn't have shorted Tesla stock. No, if you shorted it from 2022 to basically pre-3Q numbers 2024, you made a killing. I think that reality is setting back in. And the numbers right now, no, the numbers last year were not as bad as this year. If they do 370, that's going to be like the worst delivery numbers since 2Q22. That's an utter disaster against a backdrop of continued discounts and them losing share in all key markets. I mean, this is a fledgling car company that I think is going to not deliver on FSD this year. They're still level 2. Again, they have a critical intervention every roughly 300 miles, where Waymo's at 2.5 million miles. That's a disaster. If you release that into the wild, people are going to get hurt and probably worse. So I think this is the year this stock cracks. I think it's going to be the best short in the history of markets.
One more here before we let you go, Gordon. I just want to get your overall thoughts just on robotics here, because it sounds like you're not a believer in Tesla robotics. Are you a believer in robotics overall, like AI, physical AI, where, obviously there's not just Tesla working on physical AI. There is a lot of companies working on physical AI. Do you think like 5 years from now, do you envision, us all having, a C3PO or, R2D2 or robots helping us? What's your vision there? Or do you think this is all just smoke and mirrors at this point in time?
I think AI is one of the biggest, if not the biggest, bubbles in the stock market. The problem is, again, you're starting to see signs of Microsoft pulling back on AI CapEx. You really need one of the hyperscalers to come out and unequivocally say we're cutting CapEx. The current AI applications today are not, they're not monetizable. There's no money involved. They're essentially given away for free. So this massive investment that these companies are talking about in data centers to buy all these GPUs, I think is eventually going to be frowned upon by investors, and inevitably companies are going to have to pull back on CapEx. We're not fully there yet. So the bubble continues, and we'll see what Nvidia has to say today. Keep in mind, XAI and Masa, right, just made huge investments in chips. So Nvidia's actual numbers may not be that bad. I think their guide is what people are going to be focused on. But I think that the actual applications of AI have disappointed in a significant way. So I don't think we're, 5 years away from, cheap robots that the majority of Americans can afford. Will Kim Kardashian buy one for $200,000 and make videos with it? Yeah. But is Joe the plumber in Cleveland, Ohio, going to have a robot washing his dishes in 5 years? In our view, absolutely not.
Gordon Johnson, CEO of GLJ Research, stating his opinion on pre-market prep. We love it, Gordon. We'll get you back again real soon. Thanks for joining us.
Thanks a lot, guys.
Thanks, Gordon.
Thank you.
All right, folks, what do we got here, Dennis? AppLovin. Tell me what.
Well, yeah, we're going to get to that. Just, sum it up. One thing about Gordon is he is so strong with his opinions. You've got to give him that. He sticks with his opinions. He's convicted. So we'll give him that for sure, whether you agree with them or not. AppLovin just got fuzzy panda'd. So what do we mean by that? Fuzzy Panda came out with a tweet exactly 12 minutes ago. Short AppLovin. Former said this AI hype story was built on ad fraud. That is the tweet. And then there's multiple tweets that they've now linked, obviously, on this. They have a whole pile of tweets here. But they are piling on because we know AppLovin, $490, $500 6 days ago. It is getting hammered here right now. So, and it's not only AppLovin. I actually noticed a lot of other Momo names. Fuzzy Panda just took out some air from Palantir, from some of the other ones that are starting to follow here a little bit in suit. They've obviously, Fuzzy Panda has, not nearly a track record like a Hindenburg or anything like that, which, is actually well respected amongst these. We don't even know who Fuzzy Panda is. Like, we don't know who is behind
We
Fuzzy
saw
Panda.
The Office once, didn't we? Didn't we track down a picture of The Office?
Fuzzy Panda, I don't know if the
But
internet's
maybe
done
you
that
could
or
do
not.
that in the background.
We'll try to hunt that down, but we don't know anything about Fuzzy Panda. So you have to take, everything that they say with a grain of salt. Obviously, the timing of this short report is deliberate and intentional because you have a stock that has broken all momentum and kick them when they're down. So this stock is being kicked when it's down here right now. It is down now another 23 points. I tend to think that the dip maybe gets bought here eventually.
Mm.
But I want to be the one? Like, there's so many Momo traders that are just caught in this thing already, and now they're getting caught further. So, the thing is, it's down 26 points now just on this report from Fuzzy Panda, who we don't even know who Fuzzy Panda is. Like, they've just been coming out, in the last couple of years and showing these short reports. So, do you follow this stuff, Christian? Are you a Fuzzy Panda fan? Do you jump in here and read the reports, or is this just all noise to you?
Oh, I mean, yeah, like to your point, we don't know who this is and so forth, but it's research, and at least they're putting out, I guess, some information, and that's like with any big, company who does a lot of these short reports too. It's whether it's the information that they put out, and clearly these guys, and well, I'm sorry, I shouldn't say clearly because I don't know, but it seems like a lot of these short reporters, they probably take a position, and then they put out a report. I don't know. It always seems a bit sketchy to me that they already. Again, I don't know what they do or what they don't do, but I'm saying that they probably positioned in a stock and then released a whole bunch of information on it, and then the company will eventually have to respond to it depending on how far the stock goes down. So. I think that is important to kind of keep in mind, but you can make a lot of, if you catch these things very quick, and I think you did catch it very, I posted it here in the chat, but if you catch these things pretty quick, you can make money off it.
Yeah, I traded it on the tweet, and I actually got short 378. I covered 368, so that was a little bit too. That was during the Gordon interview. It pops up at me, and I was like, oh, I'll try it. I actually went down like 373, but I'll tell you, you never get. So if you're trading headlines, the algo's got the initial headline. You never get that. What you want to get is the snapback move. That's where humans can actually get. So if you look initially, and I don't know if you can dig into that, but just telling you how I trade headlines, you won't get that initial move, but you get see it there, the little check back up, Joel. So you get the little check back up there, and that's where you can, get the on. You'll never get that initial move. The algos are all over. Ding, 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 ding. Algos instantaneously. Stock is down in 0 seconds. But then they just clear out that first part of the book. Well, you have buyers, maybe people covering and, bringing back in. Maybe people don't even know the news. So you get a few little bounce back. That's where you can get the short on. Obviously, I covered this way too soon. I did not think Fuzzy Panda was going to knock this thing down 7%. I thought 3% was pretty decent. 7% seems like an overshoot to me. But we know what happened in Globe Life. GL.
Yeah,
I mean,
I brought that
that
up.
was back in 2024, and that stock was absolutely insane.
Right
how
here.
much it went down. Like, I was jaw dropping, couldn't believe how much it went down. 110 to $40 in like a day. Like, this is like not some high growth, flyer like AppLovin that valuation's an issue.
It's an old company.
GL was an insurance company that's been around for decades. I mean, so anyways, if you were buying that Fuzzy Panda dip, and I did buy that Fuzzy Panda dip, you were rewarded tremendously. Does that mean AppLovin's going to reward? This is not the same type of animal. It doesn't have valuation support. The Momo traders are all hurt. It's kind of the perfect stock for them to pick on. So at this point in time, like the timing of it's impeccable. So they did their homework on, picking on the stock when, obviously the Momo traders are all broken and there's no valuation support because the thing trades, I don't even know where it trades, but the valuation's crazy. So I don't know if I have the guts to come in here and buy the dip on AppLovin. The forward PE on AppLovin is 54. So I guess it's not as crazy, but price to sales 27. I guess because it's come down so far so quickly, it starts to look, like it's not as expensive as it was. But I don't know if the allegations were to be true.
I think that there's another report out too. I just wanted to interrupt. Sorry.
Go ahead. Go.
I believe it's a company called Culper is saying that they're also short AppLovin, ad tech platform mobile games, for having peaked at $173 billion. So you got two short. I believe that's two short reports out there on AppLovin
right now. That just came out.
Yes.
Who is this other one? What's
Culper,
their name again?
I believe.
I'm trying to find it.
Where did you? Culper is.
Culper Research. Yeah, I see it here now. You think they're teaming up?
Oh no!
I mean,
no.
Culper Research. You're
like
exactly right. So it got one short report, and then literally another one just came out. This is 4 minutes ago. Christian, you're all over this. Thanks for this news. So here's the tweet. Culper Research, which has 26,000 followers, so not a huge following. We are short AppLovin, an ad tech platform for mobile games, having peaked at $173 billion in market cap. We believe AppLovin could go down as the single largest stock promotion unraveling since at least the great financial crisis. So, I mean, this is our full report too. Were they teaming up here? Who's Culper? Do we know? Does anybody know who
Fuzzy
Culper is?
Panda? I don't know. I don't know.
Maybe they're all teaming
They
up.
got a
here.
website. They got a website, Dennis.
We're at Culper Research here. I've never heard of Culper Research, so this is good. You know, we're learning more about these. So they're saying, other people are saying Fuzzy Panda is teamed up with Culper, that they are. I don't know if that's true or not, if these are related, but we have two short reports at the same time. Have they teamed up before? Because I don't know Culper. If the chat knows, that's why we have the chat, because we can ask the chat questions. Obviously, you know, we got a couple.
Are you
thousand
looking at the
people can ask
screen at all,
questions here.
Dennis? Are you looking at the screen?
Yeah, I am. Culper Research. But okay,
Let's
so if we go to Culper Research, does it say who it is? Like if we go, I'm going to the website right now.
Yeah, no, it's one particular guy, Christian Lamarco.
Okay, so we got a name on this one.
Yeah, Christian Lamarco.
Christian Lamarco, based in New York City. Okay,
Yeah.
well, I don't know if they're teamed up or not, but that's, you know, a hell of a coincidence that they both came out with the report at the same time. Maybe he was thinking about issuing this report. He's like, I got to get mine out there because somebody else just jumped the gun here. So we got the name. That's at least good. Like Fuzzy Panda, we don't know anything about. But Christian Culper, you know, he's got his name out there. So he's putting his name out there and says that, you know, this is going down too. Wow. You know, just when you thought, you know, you're getting a little bit of bounce in some of the known Momo names here, Christian, you get, you know, these two short reports come out and kaplooey. Now you got all of a sudden a Momo sell-off here, at least in the one name. Palantir's holding up, hasn't went down here. But just watch that you don't get a contagion going here again, because there's a lot of Momo traders that obviously are hurt very bad here this morning in APP.
Let's just real quick before we wrap up the show. I mean, this guy has full disclosure here. On February 4th, he issued a short report on AAOI on February 4th. So that wasn't too long ago. On December 5th, he initiated a short report in Tree. Let's see here. December 4th. Well, he took some heat on that one.
Yep.
And then Zeta on November 13th. Isn't Zeta the one that is that the one that pays a crazy dividend? No,
Zeta just reported earnings too last night.
They did actually, yeah. Stock has bounced here too. I believe Zeta was down last night, so it has bounced.
Okay, all right. We gotta take a breath here, and we gotta wrap up the show. We're 9:07. I mean, Christian he's got a hot. But the comment of the year, maybe one of the best comments in the chat, in the history of the PMP chat, comes from JRP. And he says, Fuzzy Wuzzy was a bear.
That's good. Fuzzy Wuzzy. I might call him Fuzzy Wuzzy forever now. Fuzzy Panda. Fuzzy Wuzzy was a bear.
Okay. Let's see if we get an inside
that made me
day.
laugh. That made my day. Great comment.
Yeah. Let's see if we get an inside day. People want all these, calls on Nvidia. I could get rid of this line. I just tell you, if they hit it, I would be a buyer down here at 113. I don't know where that is with the expected move. And I'd be with wherever the expected move was. What did he say? It was 10%. So that's $13. Yeah. It closed at 126. What do you know? $13 puts it
brings us right to the deep sea low.
Yep. And then $13 on the upside takes you up to this 140 area.
140 resistance. That's very well defined. The 140 resistance. You know what? I'm thinking that 113 to 140. You picture CC ligators, charts there. I figure that captures it. Unless they have, like a disastrous report where they're saying, growth is slowing or something. I don't think they're going to say that. I think it's going to be under the expected move. I think it's going to be some chop. We're in a choppy environment. I think it's going to be a lot of chop here, but I don't know if I'm like selling all my tech stocks ahead of the Nvidia. I don't know if I'm buying them all ahead of the Nvidia year either, but very, very interesting. It's going to be an interesting night. 420. Buckle up, folks. It's going to be some movement.
Wacky Wednesday. I didn't even get to name the show today. I'll do it after that. I'm going to call it Wacky Wednesday. Thanks for joining us on PreMarket Pro.